Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 23rd, 2025, we're diving deep into QQQ, the Invesco QQQ Trust, which tracks the Nasdaq 100, focusing on both current events and the raw chart data. The market has been a mix of signals recently, with the S&P 500 closing at new record highs while the Nasdaq Composite, which QQQ largely reflects, snapped its winning streak yesterday. Investors are keenly awaiting a busy week of big tech-dominated earnings, a significant catalyst for QQQ. On a positive note, there's buzz around a potential US-Japan trade deal, which has seen Dow futures rise. However, tariffs biting into some company profits, like GM, show the broader market isn't without its challenges. Even within tech, we've seen divergent performances, like AMD stock soaring on new AI chip announcements, signaling specific sector strength. Now, let's turn our attention to the charts to see how QQQ has been reacting to these broader market currents. Looking at the daily chart for QQQ, we can observe a clear long-term uptrend that has been in play for well over a year, starting from early 2024. Price has consistently made higher highs and higher lows, reflecting strong underlying bullish sentiment in technology stocks. However, this uptrend hasn't been without its sharp pullbacks, providing crucial insights into market dynamics. Let's zoom in on a specific period, particularly the dramatic volatility we saw in early April 2025. Here, QQQ experienced a steep decline from around 476 down to nearly 402, a drop of almost 15% in just a few days. This sharp reversal on April 4th and 7th was accompanied by exceptionally high volume, indicating significant selling pressure. However, what's equally important is the rapid and strong rebound that followed, with QQQ quickly recovering to 466 by April 9th, suggesting strong buying interest at lower price levels. This V-shaped recovery signifies that despite short-term fear, long-term investors were quick to step in and buy the dip, which is a bullish sign. Expanding back to the full daily chart, we can identify several key price levels that have acted as significant support and resistance. Currently, QQQ is trading around the 561 to 562 mark, just shy of its recent high around 566. This 566 level represents a key short-term resistance that the bulls need to conquer for a continuation of the rally. Below current levels, we see immediate support emerging around 558 to 560, a level tested and held multiple times over the past few weeks. A more substantial support zone lies between 550 and 552, evident from late June and early July's price action. Should this level fail, the next critical support is around the 530 to 535 range, which served as strong resistance in May and turned into support in early June. Further down, the 490 to 500 psychological level has historically been a strong area of demand, as seen in October 2024, January 2025, and March 2025. And finally, that extreme low of 402 from the April 2025 flash crash remains a very strong long-term support, though a retest is unlikely in the short term under current conditions. Now let's zoom into the hourly chart to observe the more granular price movements leading up to today's activity, though keep in mind this data concludes on July 11th for hourly views. We can see periods of tight consolidation and small rallies, followed by pullbacks, reflecting typical intraday volatility. The hourly chart shows that even within strong daily trends, there are opportunities for shorter-term trades based on these smaller oscillations. Transitioning to the 15-minute chart, which gives us the most up-to-date intraday view, specifically for July 22nd, 2025. Yesterday, July 22nd, QQQ began the trading day around 563.28 and experienced a notable dip during the midday trading session. Specifically, between 1347 Universal Time Coordinated and 1402 Universal Time Coordinated, we saw a sharp drop from 561.535 to 559.02, reflecting the Nasdaq falls headlines we mentioned earlier. This rapid move highlights how quickly sentiment can shift, especially around specific market hours like midday. Although there was some recovery towards the end of the day, the overall close at 561.25 on the daily chart indicates that the bears had a slight edge. This intraday weakness, coupled with the daily chart's slight pullback, suggests a degree of caution as we head into critical tech earnings. So, what are the reasons to be bullish or bearish on QQQ right now? On the bullish side, the underlying long-term trend remains firmly up, and previous significant dips have been aggressively bought back by investors. The consistent record highs in the broader S&P 500 suggest a generally robust market environment, and the tech sector, which QQQ dominates, is often a leader. Furthermore, the ongoing narrative around AI and innovation, as exemplified by AMD's recent surge, provides a strong tailwind for the technology sector. However, the bearish arguments are equally compelling. QQQ is trading near its all-time highs, which often precedes profit-taking or consolidations. The Nasdaq Composite snapping its winning streak yesterday could be an early warning sign of this. Crucially, the upcoming wave of big tech earnings presents a double-edged sword. Strong results could fuel further gains, but any disappointment could trigger significant corrections, as we've seen before. For traders, watching volume patterns during these key price movements is essential. Higher volume on upward moves supports a bullish continuation, while elevated volume on downside breaks could confirm bearish momentum. When deciding to trade, consider the confluence of signals. If QQQ can decisively break above the 566 resistance level with strong volume, that would reinforce a bullish outlook for a continued rally towards new highs. Conversely, a sustained break below the 550 to 552 support zone on increasing volume would signal short-term bearishness, potentially targeting the 530 to 535 area. For swing traders, entering long positions near key support levels like 550 or 530 with tight stop losses below those levels could be viable. For short-term plays, watch the 15-minute chart for reversals at intraday support or resistance levels. Conversely, shorting near current resistance, 566, with a stop above it or on a confirmed break below key support, could be a strategy for those with a bearish bias. Remember, proper position sizing and risk management are paramount, especially given the increased volatility around earnings season. To recap, here are the crucial price levels to watch for QQQ. The immediate resistance is at 566, the recent all-time high. Key support levels are found at 558, then more strongly at 550 to 552, and a critical zone around 530 to 535. For unbiased predictions, a continued bullish push towards and potentially above 566 is likely with strong big tech earnings and positive market sentiment. This likelihood would be reinforced by higher trading volumes on green candles and a general risk-on appetite in the broader market. Alternatively, a pullback to the 550 to 552 range is quite likely, especially if tech earnings come in mixed or there's some profit-taking after the recent run. This scenario gains reinforcement if volumes increase on red candles and if overall market sentiment shifts towards caution. A deeper correction to 530 to 535 is less likely in the immediate short term unless a major negative catalyst emerges from earnings or broader economic news. Looking ahead, the primary thing to watch for is the unfolding big tech earnings season over the next few weeks. These announcements will undoubtedly dictate QQQ's short to medium-term direction. Also, keep an eye on any developments in trade agreements and macroeconomic data, as they can significantly impact overall market liquidity and investor confidence. Stay agile and adjust your strategies based on how these key events unfold. That's all for today's in-depth analysis of QQQ on Explain the Charts. Don't forget to like this video, subscribe for more insights, and hit that notification bell so you don't miss our next market breakdown.